Today I'm just going to be going over a few charts I like going into the end of the year, into 2023. Let's get straight into the video. So we took a little bit of time off for the holiday season, but now we're back on the grind. I might start doing this a little bit more often, just breaking down some charts I like, maybe every week or two. But in today's video, I'm just going to be breaking down the futures like the ES, Nasdaq, YM, the Dow Jones, the VIX. So let's just waste no more time and switch to the trend spotter. So the first chart we're looking at is the S&P 500 futures, ES. The first thing I want to point out to you guys is the 200 daily simple moving average. So going back to April, you've gotten rejected off at once. The 200 SMA marked the high in August right here, August 16th. You literally wicked off it to the tick, then sold off about 800 points down lower. Whenever you're watching this video in November, you're coming right back into the 200 simple moving average, which is now sitting at 4,060. And this is going to be a critical point to watch in the days and weeks coming. Anyone who's looking to short the market is probably waiting for the test of the 200 simple moving average. And this also sets up some great risk reward to the downside. If you get rejected off 4,060, you just start buying puts up here, stop loss above this level. You have room down lower to 3,900, even down lower to 3,800. Then every 100 points after that, 3,600, 3,500, 52-week lows. But that's if you get rejected off it. Now, if you start to break over this level at 40.60 and turn this into support, you can continue this climb higher, potentially start climbing up to 4,100, 4,200. And the next level we need to be watching is the August swing high sitting up here at 4,300. So like I mentioned, one rejection right off here in April, rejection here in August. Now we're coming back to this level right here in November. So there's going to be a critical point watching to see where the market wants to go. And this also leads into some economic data coming out in the following weeks. We have PCE data, CPI data, then FOMC. This is going to be a big area to watch moving forward in the market. And we also have lots of supply zones overhead. So in my opinion, you look set up for more downside, but I'm not going to make any predictions. I'm just going to play the price action. If sellers start to step into the market, I'll go short. But if I see that there's buyers still active in the market, pushing price over the 200 SMA and through the supply zones, I'll go long in the market. It's really as straightforward as that. I don't try to make crystal ball predictions and let the price action dictate my decisions. But I just want to zoom out a little bit further too to show you guys how critical the 200 SMA has really been in the past few years. So I don't really feel like scrolling out too far. But going back to 2016, you can see the 200 SMA act as resistance, support. Then you start zooming over. Now we're in 2018. Act as support pretty much the entire year of 2018. 2 or 3, 4 or 5 tests right here. Then once you broke below 200, going into 2019, start acting resistance. Then once you flipped it back as support, you pretty much held it up until the COVID crash. The market went vertical from 2020 all the way up to November 2021. So you're almost nowhere near the 200 simple moving average. And this level has been critical going back. You guys can go check the charts, go back test it. The 200 simple moving average is pretty well respected. Lots of traders and institutions watch this level. And you can clearly see that going back in time, that this moving average is pretty well respected. And you can definitely expect a reaction off of the 200 simple moving average moving forward into the future. Let's just check out the Nasdaq. The Nasdaq has clearly been the weakest index. The S&P 500 was sitting at the 200 simple moving average, but the Nasdaq is still 800 points away from it. And it's pretty much been almost disconnected the entire way down since the bear market started. You can see back up here in March, you found sellers up here, and that marked the top up here in August, and you sold off for like 8-9 weeks after that. You tried to test the 200 back in August. You're pretty much about 400 points off it. You can call that a reaction, but it really just followed the S&P 500 down lower. And now you're just kind of consolidating sideways in a range from 11,500 up to 12,100. You've just kind of been shopping here since November 10th. There's no real clear decision in the market. Buyers and sellers haven't really decided where they want to go. And you're just kind of shopping in this region right here. So I think if you guys didn't know, the Nasdaq 100, the large majority of the holdings are also in the S&P 500. So like stocks like Apple, Microsoft, Amazon, Google, Nvidia, pretty much the biggest companies in the world, they're on both the Nasdaq and the S&P 500. So regardless if you see the S&P 500 starting to get rejected at the 200 simple moving average, it's definitely going to cause a reaction in the Nasdaq because like I mentioned, you have pretty much the same holdings across both indexes. So in my opinion, it really just comes down to where the S&P 500 wants to go. If you start to see sellers step into the S&P 500, the Nasdaq will clearly start getting pulled down. If you start breaking below 11,500, I think you have to expect that you'll start moving down lower towards about 11,000 flat, and probably around here, June lows, 11,060. After that, back to 52s at 10.5. But if the S&P 500 finds some strength into it, once again, push the Nasdaq up higher. The biggest thing I want to see on the Nasdaq is you just start taking out these swing highs right up here at 12.1. If you can start to take out this region right here, around this level, 12,200. Start breaking over this on Nasdaq. You're going to start pushing up towards 12,500, and that is a perfect confluence area for bears to go short on the market up here, which also coincides with the 200 simple moving average on the Nasdaq. So those are the two things I'm watching on the Nasdaq. Can you break over this region right here at 12,100? If you do, you'll probably start testing the 200 simple moving average. If not, just start to watch the breakdown through 11,500. And then you'll start to move lower and start testing these regions down here, like June lows, like I mentioned. Now onto the Dow Jones. The Dow Jones is definitely the strongest index right now. You can see you came all the way down to pre-COVID highs right here, February 10th, 2020. You came down right below them, right down here in August on the Dow Jones. And then you bounced almost 20% up higher, back to 34,000. Almost a bounce of 5,000 points on the Dow Jones. And you also had the 200 weekly moving average flowing around down here. And if I zoom out a little bit further, you can see that the 200 weekly moving average has been pretty well respected down here in 2011, all the way up here in 2016. And now in this recent pullback of 2022, you found some buyers off this level. You kind of broke down through it slightly, but they bought you right back up. And you clearly see a big impulse move higher. And now if I zoom into the daily time frame, you're breaking over the August swing highs, which neither the Nasdaq or the S&P 500 have yet to do. This is clearly some bullish market structure in the Dow Jones right now. You're clearly making higher lows, and then as you can see, you're making higher highs, higher high, and then this is your first higher high over the August swing high. That's definitely something you want to see. So as long as you can hold this level around here, around 34,260, the August swing high, if you can hold this level of support, I think you're going to continue to push up higher towards around 35,000 flat. And we'll see if sellers can show up here at 35,000. We can see this level goes back around here, May 9th, 2021. You kind of got rejected off it multiple times, going up to your August, March. You kind of held that support also. This 35,000 level is definitely going to be a big one for the Dow Jones. If you start to break over this, I think it's almost no doubt you'll start, moving towards 36,000 all the way up here back to all-time highs relatively soon. Just looking at this chart, you're just 6% off all-time highs, which is kind of outstanding to think about considering how volatile the market has been this year. But the Dow Jones is definitely leading the way here in this recent rally. So, like I mentioned, biggest things to watch. Can the August highs hold as support? If they do, watch the push higher up to 35,000. If the August highs don't hold support, I'm looking for a pullback back to 34,000 flat around this region right here. These lows from November 30th. And then if those levels do not hold support, you're probably going to start coming back down to this level from March 18th, 2021. You can see this level has acted as support multiple times, acted as resistance multiple times. So it's definitely a critical level that the market has tested multiple times. And you've clearly been finding buyers off. You can see right here on November 16th, you wicked off it perfectly. And that was a 1,300 point bounce higher. Those are the biggest things I'm watching for. Now onto the VIX. So the VIX is coming into what I would like to call the danger zone. You can see that pretty much every market top also coincide with the VIX coming down here to $18. So every time the market found a new high, the VIX was staying down here in this region, and then that marked the local high, the swing high. Then you found the bottom. VIX couldn't break over 34. You start to pull back. This was the local bottom here in June when the Nasdaq hit 11,060. Then you had the massive rally in August where you moved up about 20% on the Nasdaq. The VIX once again came back down to $19. And then once again, VIX found the support down here at this level, marking the top on the market around mid-August right here. Then you move back up to 34, marking the local bottom. Now VIX is coming back into this region, which has been pretty, you can say influential down here. So the biggest thing I want to see here is how the VIX is going to react and how the market reacts. If you start to see sellers step into the market, say the S&P 500 hypothetically starts to rally up to the 200 simple moving average, VIX will likely start to move down to 1975. Then if sellers start to show up around the 200 SMA, it makes perfect sense for the VIX to bounce here. Sellers start to enter the market. They start buying puts, leveraging in, more volatility enters the market. Then you can start to see more downside coming in the market. So I think that's also a pretty critical factor here on VIX. You're coming to this key level right here. That's led to massive volatility spike and massive drops on the S&P 500. If you can start to break below these swing lows here on VIX around 18.5, you'll probably start pushing down lower towards $16. This could set up for the next leg higher in the market and probably start to see the push on S&P 500 up to 4,200, 4,300. So those are the two biggest things I'm watching. The VIX and this massive confluence area here. Also lining up with the S&P 500, testing the 200 simple moving average on the daily time frame. So that's all I got for you guys today. If you guys enjoyed this video, if it helped you if you learned anything, just drop a like and comment below. I got some more videos planned for you guys, like on price action, some candlestick patterns, stuff like that. So if you guys want to see that, just stay subscribed, be on the lookout. See you in the next video. Thanks for watching.